My greetings to all. I am Nefla, Assistant Professor in the Department of Logistics Management, St. Albert's College Autonomous, Ernakulam. Today, we will discuss about the final accounts of sole traders, mainly focusing on the trading account. A sole trader is a person who starts and runs his own business as an individual. Final accounts are also known as the financial statements. These are the accounts prepared at the end of an accounting period. Mainly, these final accounts can be classified into two parts. Number one is trading account and P&L account. This is also known as the income statement. And the second part is the balance sheet. This is also known as the position statement. And these final accounts are prepared to ascertain the net profit or loss made during a particular period. And also, it shows the financial position of a business. Now, we move on to the trading account. A trading account is prepared to know the trading profit or loss made from the purchases and sale of goods during an accounting period. And this account is prepared in 4 columns. This is the specimen of a trading account. The result of this trading account may be either gross profit or gross loss. So the trading account's debit side is the left hand side and credit side is the right hand side. This debit side is started with opening stock. Opening stock is the amount and value of materials available in the beginning of an accounting period. That should be written in first item as a first item in the trading account. Second item is purchases. Total purchases are written in the inner column and after that we have to deduct the returns from the purchases and the balance amount will be written in the outer column. Next item is carriage. Carriage inwards is a direct expense because it is the transportation expenses incurred by the buyer in purchasing the goods. That should be debited in the trading account. Next item is wages. This is also a direct expense. Next item is manufacturing expenses. These are the expenses incurred in manufacturing a product. So these are the items to be debited in the trading account. After that, we have to come to the credit side. That is the right hand side of the trading account. In the right hand side, we have to write sales as the first item. Sales is the total sales and after writing the total sales, we have to deduct the sales returns from sales. And the balance figure should be written in the outer column. The last item is closing stock. Closing stock is the amount and value of goods remain unsold at the end of an accounting period. After writing all these items in debit side and credit side, we have to total both the sides. That is the debit side and credit side. And the highest total should be recorded on both the sides. Okay, if the credit side is more, the difference is known as gross profit. That should be written on the debit side of the trading account. If the difference is more or if the total is more on the debit side, it should be gross loss and it should be credited in the trading account. And after completing this trading account, this balancing figure, either gross profit or gross loss, can be transferred to the P&L account. Next, we move on to a problem. The problem is prepare trading account of Mr. Rohit from the given information. We have the information such as opening stock, purchases, sales, etc. So first of all, we have to draw the trading account as per the format given. The trading account is drawn like this. The first item in the debit side is opening stock. So we have to write the first item here. This is the first item, opening stock. The amount of opening stock, 12,000, is written on the debit side. What is the next item? Yes, purchases. Purchases is written on the debit side and it is entered in the inner column. Yes, 62,000 is the amount of total purchases. It is written in the inner column The reason is that we have to deduct returns from it. So next item is less returns 2000. The balance is 60,000 is written in the outer column. The next item is carriage inwards. 3000 is the carriage inwards, that is also written. Next item is wages as per the question. So the amount of wages 6000 is written in the debit side of trading account. After that, here comes the manufacturing expenses. Manufacturing expenses amounts to 2000. It should be written on the debit side as it is an direct expense. Then next item is sales. Sales is written on the credit side. After entering all the items in the debit side, we have to move on to the credit side. The first item is sales and the amount is 95,000. From this sales, we have written in the inner column, we have to deduct 5,000 returns. So less returns 5,000 and the balance amount 90,000 is written on the outer column. This is the sales amount. Next item is closing stock. By closing stock we have written and the amount is 18,000. Now all the items have entered in on both the sides, in the debit side as well as in the credit sides. Next step is to make the total. Or we have to find out the total amounts. So the highest total, here 90,000 plus 18,000, this is the highest total. This amounts to 1,08,000. That should be entered in both the sides, that is in the credit side as well as in the debit side. Okay, this is written on both the sides. Then next we have to find out the difference between these two sides. That is, in order to find out the difference, we have to deduct the least total, that is the debit side total, from the highest total of rupees 1,08,000 and it will amount to 25,000 rupees and this is known as the gross profit carried out. Here credit side is the highest side, so the difference will be gross profit. If the debit side is more, it will be a gross loss and it should be written on the credit side. Okay, after writing this trading account, this amount will be transferred to the profit and loss account. So this is the problem solution of trading account. Then the same gross profit can be calculated by using an equation. And the equation to find out gross profit is sales minus cost of goods sold. Here sales means sales minus sales returns. And the cost of goods sold can be found out using an equation, that is opening stock plus purchases minus closing stock plus direct expenses. This is the equation to find out cost of goods sold. So let's see how to solve the same problem using equation. We have already solved a problem and that was using the trading account. Now let's see how to solve the same problem using the equation. This is the problem. So first we have to write the equation, that is sales minus cost of goods sold. Then sales means sales minus sales returns. What is the amount of sales? It was 95,000 and 95,000 minus 5,000, that is the amount of sales 90,000. Then in the same way we have to find out the purchases, because purchases is required to find out the cost of goods sold. So we can find out purchases as in the same way we computed the sales. So the purchases is equal to 62,000 minus 2,000 is the purchase returns and the amount will be 60,000. So the sales amount is 90,000 and the purchase amount is 60,000. Now we can move on to the cost of goods sold equation. Opening stock plus purchases minus closing stock plus direct expenses. Here the opening stock we know that 12,000. So 12,000 plus purchases, that is 60,000 minus closing stock. Closing stock amounts to 18,000 plus direct expenses. Here direct expenses is the sum total of carriage inwards, wages and manufacturing expenses. That is 3,000 plus 6,000 plus 2,000. That is the direct expenses. Then now we can add 12,000 plus 6,000, that amounts to 72,000 minus 18,000 plus direct expenses total 11,000. And the final answer will be 65,000 will be the cost of goods sold. By applying this equation and substituting the amounts, we will get the cost of goods sold amounting to rupees 65,000. So, our next step is to compute the gross profit. Here, we use the first equation, that is sales minus cost of goods sold. We know that sales amounts to 90,000 and the cost of goods sold is 65,000. So, in order to compute the gross profit, 90,000 minus 65,000 and the gross profit will amount to 25,000. So, we can conclude that either we are using the account method or we are using the equation method, the amount of gross profit will be the same. I hope all of you can understand the trading account concept and how to solve the problem using account method as well as the equation method. Thank you all. Have a nice day.